Good morning from Lagos, Nigeria. Welcome to today's webinar, the 26th day of May. The fact that we are here meeting online does not mean that we cannot network. So let's meet us. My name is Blessing Okezonwali, and I'm your moderator for this program. The new Tax Act was announced in May up until this point, say by December last year. I think there was a lot of conversations around the applicability of the law, the interpretation, what are the bans, how does it apply, how does it affect our businesses. Lots of experts has come up to write articles, thought leadership, webinars, seminars, and a host of other things. At some point last month, we had a webinar on e-invoicing, which is an aspect of the Reform Act of 2025. Today, we are going to be looking at a topic that speaks to employee compensation and vendor payment, the compliance priorities for businesses. There's been a lot of observations around how compensation is computed, how vendor payments are done, what are those red flags that brings about escalation, especially in the course of an audit. These and a lot of other things are the conversations we're going to be having today. My name is Blessing Okeze, and I am your moderator for today. Before we introduce our are well prepared to speak to the entire ecosystem around employee compensation and vendor payments. This webinar has been put together by Stranza Chartered Accountants in collaboration with Duffers West Africa Limited. Stranza Chartered Accountants is a leading accounting and advisory firm in Nigeria. A deep-rooted understanding of the Nigerian landscape, coupled with our affiliation with ROSM, which is the world's sixth largest network of independent tax, audit, and consulting firms, positions us uniquely to deliver exceptional services to our clients. With over 70 professionals serving the middle market across various industries, Stranza offers a comprehensive suite of audits, accounting, tax, advisory, consulting, and outsourcing solutions. Our partnership with RSM empowers us to leverage global best practices while maintaining a strong local focus. Founded in 2000 veterans, Stranza is committed to providing clients with world-class services that combine global standards with a deep understanding of the Nigerian business ecosystem. Thus, West Africa Limited, on the other hand, is the technology arm of Stranza Chartered Accountants. It is the practice area that is saddled with the responsibility of developing diverse technology systems that supports businesses. Its offerings cut across custom software development, web and mobile app development, cloud infrastructure and hosting, IT support, automation, and a host of other services. Duffers has built the platform that turns compliance from a monthly burden into a mouse click. I do say so. iPay, being one of its products, offers integrated payment and compliance suites to organizations across industries, including the e-invoicing integration system as introduced by the Nigerian Tax 5. Both Dotworks and Stranza are ISO 27701 certified for information security system, and they are both part of RSM's global network, leveraging 64,000 people across 120 countries. I want to say a special thank you to our managing partner, Ibentu Jewels, and our CTO, Tunde, for putting this together. Thank you very much. So now let's get into the nitty-gritty of today. I have with me 4 experts. Ogechi is who is our director for pay administration, and Akim, who is the director and an auditor for the past 2 decades. And then we have Damilola, who is an expert on the LROS, who will be doing justice to telling us what the expectations are from the government perspective, and who will be speaking to us on the tools that we need to ensure we stay compliant and hassle-free in delivering compensation and vendor payments. Now, let's do well to introduce Ogechi. Ogechi is our director, and she brings over 15 years of experience across audits, consulting, and business advisory services. She began as PricewaterhouseCoopers, leads the people and regulatory arm of Transact, and she's responsible for providing payroll and employee-related support services across oil and gas, energy, telecoms, advertising, and a host of other industries. Ogechi is a fellow of the Chartered Institute of Chartered Accountants of Nigeria. She is a reporting accountant, and with all of the years of experience she's got, she's going to be leading the discussion on employee compensation, focusing on how different components of pay are struck and their statutory implication to businesses. Ogechi, I'm so glad you. Thank you for joining the call. Please unmute your mic as you say hello to my audience.
Hello, everyone. Nice to be here. You're welcome.
Thank you so much for joining us. We have a few questions that are bothering the minds of our audience, including myself. What can you say about the evolution of employee compensation from a regulatory perspective? One who has been an administrator for years now, what are those common payroll compliance issues that employers do, that especially around payee pension? And then what are those, how do you think organizations should capture things like allowances and one-off payments as they compute their payroll?
Okay, thank you so much, Blessing. And once again, you're all welcome to this call. And it is my desire that, we all leave here fully informed, and ready to do the right thing. Okay, so talking about the evolution of employee compensation, it's important to know that this evolution has taken place over a period of time, and it has been largely driven by digitization, by stricter regulations, by various regulatory bodies, and by the increasing complexity of businesses. So when we talk of stricter regulations, we talked, okay, so the moderator spoke to the fact that there's a new NTA. Yes, so this has brought additional compliance requirements. We also have the pension authorities and all that. Then talking about digitization, we can see a shift, right, from manual and compliance restrictive processes, right, to fully integrated digital, data-driven and compliance by design systems. So in other words, we see the advent of fully digital systems, ERP. We see all those those systems, cloud-based systems and all that. So all of these speak to the evolution that has been taking place. And when we look at the increasing complexity of businesses, we can look at things like cross-border, transactions happening, lots of FX transactions. We can look at businesses moving into multiple jurisdictions and the various requirements, So there's just so much going on, and this has also led to compensation being structured in different ways. So before we go fully into that, we want to just look at employee compensation. Employee compensation really is talking about everything which an employer gives or provides to an employee in exchange for their services, right? So I would like to ask us, I would like to engage the participants. Just use the chat box. Can you list out some of the things, some of the benefits you have gotten from working in your current place? Let's just look at them. Let's see what we have. Let's see what we can, we've said employee compensation is everything provided by employers to employee as a result of their working in places in exchange for their services. So I'd like to know, please use the chat box, just engage with us. Let's know the examples of, yeah, okay, I can see things like bonuses, fantastic. I can see things like pension and HMO, beautiful. Can we have more? Yes, employer pension, HMO, 13th month, beautiful. Oh, health insurance, excuse me, yes, car allowance and so on. Fantastic. Bonuses, HMO pension, yes. So we can see that our employers are doing well. Official vehicles, beautiful. So we see that employers increasingly provide these services, car financing goods to their employees to enable them do better, right? So we have so the compensation that employers provide, they are both monetary and non-monetary. So we have things like the salary, your bonuses, like we have stated, excuse me, the 13th month, profit sharing, and all of that, accommodation. And then we also have things like your HMO, your health insurance, pension contribution, leave allowances, and all that. Yes, so this is what I've actually been looking out for. Neka had mentioned training. Yes, so there are some monetary parts of compensation which sometimes people tend to overlook. So things like training, yet flexible work environments. Oh, that's beautiful. Flexible work environment, career development opportunities and all. Funny enough, I know someone who rejected a higher offer, opting to go for a lower offer because the chances of career progression were shorter in the lower paying organization compared to the higher one, and she had lots of career development opportunities. So these things are also, in a nutshell, our employers are doing well. They provide a whole lot of compensation. And this is important because right now, compensation has become a high compliance risk area, right? Any error discovered, or most errors discovered in relation to employee compensation usually trigger tax exposures, right? It triggers regulatory scrutiny, and if unchecked and it persists for a long time, could eventually lead to reputational damage. Employee compensation is also important because it has gone beyond, just a HR or administrative matter to a strategic business decision. And employers in structuring compensation, have in mind attracting the best talents. They have in mind, motivating the performance of their staff and even retaining this kind of staff they want. So you find situations whereby an employer structures the compensation so that, they can retain their staff. Employee compensation is equally important because, regulatory, like we mentioned, regulatory scrutiny has increased. So you have compensation being cross-checked by various regulators, by the tax authorities, by the pension commissions, by the labor unions and other agencies. So this employee compensation is really important. It's no longer something to be considered, it's no longer like an afterthought. It's not something to be taken, seriously. So compliance is not just about paying tax. It is about paying it correctly and on time. And you look at things like your payee, who it should be remitted to, when it is due, pension, NSITF, NHF, ITF, it's so these things, when they are not done correctly and done in time, you give rise to penalties. You now see tax audits coming up. You now see some form of reputational issues and penalties, interest and all that. And we really don't want that, honestly. So it's important that organizations comply with the requirements of the various statutory bodies and the various statutory requirements. Okay, next slide please. Okay, so when you don't comply, or where are some areas where things could go wrong, in structuring compensation, inaccurate computation. So no matter how beautifully you structure your compensation to attract talent, to retain talent, if the computation is wrong, so for instance, if the payee if the payee schedule, used to compute your payee, if it's wrong, if you don't use the appropriate one, if you use the one that existed in time of PIT as against the current one, then of course you'd have computed payee wrong, you had computed pension wrong, and all of that. Then another area where things could go wrong, documentation. Some organizations don't keep proper records, and guess what? When tax audits happen, when the tax authorities come, they want to see. They would always ask for documentation. They'd always ask for evidence. When you don't have them, then it's an issue, because what is not documented is as good as it not being done. Incorrect treatment of allowances, inconsistent applications of reliefs. Now, reliefs such as the rent relief, your insurance premium, interest on mortgage, and all those reliefs, that help to reduce your tax liabilities. It's important that these things thrive on documentation. So for each relief you intend to apply, there must be the underlying document to support it. It's really important. It's not something you just assume, I'm a tenant, I pay rent, so it is assumed. No, there has to be the evidence. So all these things are important. Even when payroll adjustments are done, there has to be the recalculation of tax. Else, there's a risk of things going wrong. And then we'll look at what good practice. So what does good compensation structuring, what does it look like in practice actually? The first thing is clear compensation structures and policies. Everything should be clear. There should be no ambiguity about anything, right? You have regular payroll health checks. There should be checks built into payroll computation. Accurate employee records. At the point of employing staff, all the necessary information should be obtained and retained, because definitely you're going to have to make reference to this at some point or the other. Audit-ready documentation. I mentioned that when the tax guys come, they ask for documentation, and it helps, when these things are readily available and they're in place. There should be clear rules on reimbursements and allowances. Honestly, there's a difference between reimbursement, there's a difference between allowances, benefits, and all that. The rules should be clear. The rules, and once they are clear, it helps you avoid, errors in computation and all that. Then it's important that compliance, for you also know that compliance is a continuous process, it's not the year-end process. A lot of us leave it for year-end or month-end and we start running helter-skelter. No. Compliance is a continuous process, it's not a year-end process. And in summary, I would just want to say that payroll right now, or employee compensation, is more of a compliance requirement than is more compliant than administrative. We shouldn't just look at it as an administrative task. No, a lot of it has to do with compliance. Then also note that compensation decisions, right, have multi-regulator impacts. However you choose to structure your compensation, know that it has, various regulators that are going to be looking to it, and if there are errors, there's going to be lots of impacts, from payee, from the pension, from the NSITF, and honestly, you don't want to start having penalties from all these bodies. And then even if you come across some some issues or some errors, most payroll problems are fixable before an audit. It's possible. So by the time you carry out regular payroll health checks, we can identify some of these problems or errors and fix them before an audit comes up. Then proactive review is actually cheaper than regulatory corrections. It's good to proactively check all these things, review them, fix them, before the tax guys come. Finally, compliance must now be embedded into payroll systems. Like we said, compliance is no longer an afterthought. Compliance should now be embedded in our payroll systems. Now, employee compensation structuring, everything should be done with compliance in mind. Thank you very much.
Very loud and clear. Compliance is not HR matter only, it is a business decision. It is no longer administrative to stay viable. Thank you so much for sharing those nuggets. I see that there are lots of things in terms of documentation that we need to do to make sure that we maintain an audit trail for our auditors and, of course, the tax, um, the regulatory bodies. Now, let's move on to our auditor. Let's move on to Akeem. Akeem, as an auditor who has reviewed and looked through a lot of audits, FS, financial statement of organizations, I want to believe you have quite a lot to say about this. But prior to answering, I'd like to introduce us to Akeem. Akeem brings over 18 years of experience as an internal and external auditor, and he has led engagements across FMCG, oil and gas, energy. Akeem is a fellow of the Institute of Chartered Nigeria. He's also an associate of the Charity of Taxation of Nigeria, holds quite a lot of credentials within that space. Akeem will be providing insights into the risk and control perspectives of employee compensation and vendor payments. He'll be highlighting where compliance issues arise in practice handoffs. I can to have you on the call. Thank you for joining us. We'd like to hear from you. From an auditor's perspective, what are the most frequent findings you see around employee compensation and vendor payments? What are those things that tend to surprise management when it is brought to our attention? And what do they ensure that their documentations are accurate at every given point in time?
Blessing, thank you very much, and good morning to our participants. Let me start by saying that from an audit point of view, I don't know whether our participant knows that we have a responsibility with respect to laws and regulation. So within that context, we don't just check the financial statements, we also check compliance at different regulatory points. And it is interesting that we're having this topic which concerns employee compensation from the basis of payroll and also vendor payment. So back to the point, in terms of risk, in terms of moving forward, because we are in a new dispensation with respect to payee and with respect to vendor payment. I think one area that I want to point out is the component of the compensation itself. Like Ogechi mentioned, that the composition has to be complete and adequate. I must say that moving forward for our participants, where the risk lies is not your salary that has been paid, is not the time it's been paid, is actually whether the component of the salary or the payroll, whether it's complete and whether it's accurate. So we usually see issues here where payment, normally off-cycle payment that does not follow the regular monthly payment, we see it. And when we look at our compliance with respect to the audit, we usually ask questions around it in terms of taxability. So we need to watch out for our tax base, which I call the taxable component of our payroll. It's very important that we watch it because that is one of the objectives of the new tax law. You will see that most of the tax law don't increase, they haven't really increased the rate, but they've actually reduced the rate. So they'll be focusing on the tax base with respect to our payroll. From a vendor management point of view, I think one critical area is the fact that the component of the payment itself too. I have seen a case where the company unintentionally paid excess taxes in excess, in this case withholding tax. They paid it in excess, and the reason is because the component of the structuring of the contract for that particular vendor involved many aspects. So in that process, the wrong amount within the different component of the contract was applied with the correct tax rate. And that resulted in excess payment that they are currently pursuing the recovery at the moment. And I hope that they are able to get it in cash because getting it in credit simply means I'll have to wait till when I have profits to be able to offset it. But if I'm able to get it in cash, I have my money now. So that is an area that we need to watch out for. The other area we need to watch out for is when you have too many people involved. When I say too many, I don't mean it's really too many. We have multiple parties that are involved in payment. Now, here we see cases of manual intervention. That's where we see here, where you have a lot of people that are manually involved in the process. And in that process, you find delays that can affect timing of deductions and timing of payment, and ultimately it leads to missing the deadlines for compliance with remittance. So we find cases around that area too. And what do we normally look out for? When we do our work, and I want to believe from today, our participants will also take a cue from there, because we don't do magic as auditors. We go after evidence, and we go after evidence in terms of consistency. We don't just listen to explanation. We also look for what is defensible, because a taxman will come to you, a taxman will come to you and say, can you provide evidence of your adequacy of payment? And that is what we also do as auditor. We are like an auditor before the main auditor with respect to your compliance level. So we ask questions about consistency, because the taxman regulator will ask questions about consistency. Are you applying the rules very well? Are you following it every time? We ask that question. And we also ask for visibility, which is very important. Visibility means, where are the document trails? Where are the document trails? It's very important. Everybody, the taxman will look for it, auditor will look for it, but that gives them confidence that things are moving in a structured and orderly manner. Then we also ask for accountability. Because we deal with people, we have to find out who is doing what, at what point in time, and who is approving what. So we do that. So when we find our findings, when we interact with companies, we interact more as a business partner, and in that process, we advise on certain things. Do not fix the symptom, but fix the process. So we advise on standardization, standardize your payment, ensure approvals across different strata are well documented and can be clear and visible for anybody to see. Your workflow has to be aligned. And there is something about us as auditors. What is it? We work in a way that ensure that another experienced auditor come and check our work, and that auditor, without having knowledge of what we've done, is able to understand from beginning to the end of our work. So I expect our participants to think that way too, to take in that particular context, that when you are at the other hand, prepare yourself in terms of, when I pick your document, I'm able to see consistency, I'm able to see visibility, I'm able to see accountability. And what are the costs of not doing this? Ogechi has spoken to it. I will just tell you, from a tax point of view, at least if you fall into the hand of Damilola, for example, you are more likely going to pay 30% on whatever that you have not paid correctly, and probably that you didn't pay as I went due. Yes, for us as auditors, we kind of look at our opinion from whether we should give a clean opinion or we should give a modified opinion. That is on the basis of whatever we see with respect to whether your compliance level is adequate or not. Then, of course, if you are within the finance system, finance and account department, you will have been seeing management letters flowing left and right from our auditors. And more importantly, that I will want our participants to know, auditors planned. We planned our time to do the work. So because we don't want operational drag, we don't want to affect the business too much. And for this to happen, then auditors will be expecting from the entities being audited consistency in information, defensibility of information, visibility and accountability. If these are there, we plan to avoid operational drag so that everything moves smoothly. But if they are not there, obviously there might be time wasting, and those times cost money at the end of the day for everyone's all. Not even yourself, it costs time, it costs money for us too. So my closing thought to you is this: Compliance risk is not a complex something to do. It's not complex at all. Complying with the law, whatever the law is not complex. What requires is you need to be consistent in what you do, you need to be visible in what you do, and you also need to be disciplined in what you do. My closing thought for you is this. In this current dispensation, the focus is on the tax base. It's not on the tax rate for now. LRS, NRS, all regulators, they are seeking to expand the component of what is being taxed. And I recommend to all of us here to ensure that this taxable base is consistent in terms of the documentation, in terms of the application, in terms of implementation. There is a visible way to see what is being documented, and that is done on a consistent and repeated basis. Thank you very much for your time.
Thank you very much, Akeem. Audit is all about maintaining a trail. It's about consistency, it's about standardization, it's about completing your process, have a work trail for everything you do. It's very, very essential. You're saying that it helps to limit you're saying that it helps to ease the work of your auditor and also aids efficiency. Thank you for sharing that. Quickly about Damilola, before we ask Damilola all of the questions that we have outlined here. Damilola brings to us on this call has 20 years wealth of experience on financial reporting and internally generated revenue management. She currently serves as head assessment unit Lagos State Internal Revenue Services, and she leads the strategic initiative on strengthening tax compliance, enhancing revenue assurance, and optimizing IGR. She is a fellow chartered accountant, also a fellow chartered member of the Institute of Taxation of Nigeria. She will be sharing practical insights from the regulatory and tax administrative perspective, focusing on payee compliance, assessment expectations, and common pitfalls that around vendor payments and employee compensation. Damilola, we're so excited to have you. Thank you for honoring our invitation. So there's a lot going on within, the LRS space, and I would like you to speak to us about what you and your attention to when you're looking at payee, and then those common gaps or compliance gaps that you wish businesses are aware of, and they put this in place to make sure that it does not happen. We'd like to hear from you.
Okay. Thank you so much. Good morning again, everyone. Like Ogechi and Akeem rightly said, they have overemphasized, and we cannot continue we have to emphasize compliance. So first thing I would like to establish from the beginning is compliance today is no longer just about avoiding penalties or interest. It has become a strategic business issue. Investors, regulators, financial institutions, even international partners are increasingly evaluating businesses on the strength of their governance and compliance culture. A compliance organization is generally viewed as more stable, more transparent, more credible, and sustainable. So in my words, like I usually say, compliance is not a cost center, it's a value protection mechanism. And so for us in LRS, since the NTA came into effect, we are focusing around strengthening voluntary compliance. We're focusing on transparency and reducing revenue leakages. This is reliant heavily on data, is data-driven and technology-enabled systems. That's what we're using to accomplish this. So we have three major areas that we're focusing on. The first is the tax deduction card administration. So this deduction card guides you to know the appropriate taxes to pay, to deduct from the employee and pay at the end of the month, and of course, annually. So this area, ensures payroll accuracy and ensures that these payee deductions align. Like Akim rightly said, you're deducting the right rates, you're deducting the right amount with the approved computation. The second area for us is tracking and monitoring these remittances. After we have deciphered, okay, this is how much to be deducted. Now we want to ensure that you have deducted that right amount. So we actively focus on the monthly remittances, our account receivables, remittance shortfalls, and missing schedules. Missing schedules, especially for the vendor compliance. For withholding tax payments, especially when you remit your withholding tax to LRS, you're supposed to follow it up with a schedule so that we'll know, okay, the accounts to credit, right? So these measures, we will be using data analytics to identify these inconsistencies early and engage organizations proactively before these issues escalate. Sometimes we don't even want to audit you. It costs us money and costs us time, like Akim rightly said, to even audit you or do an investigation. So when these are identified ahead, we'll be able to work around it. The third focus is enforcement. Yes, we know that we want to partner with you. We're not actually after you to punish you or impose penalties that are not there. But where we have established these sums and then it is not coming, we are going to follow up on those outstanding liabilities. And where necessary, the administrative penalties will be applied in line with the provisions of the NTA Act. However, like I said, our approach is not focused on punishment. It's proactive, it's intelligent driven, and it's collaborative. The goal is to build a sustainable compliance system, not a fear or coercive system. So where businesses commonly fall short, I mean, despite the increasing awareness, we know that there are still a lot of compliance gaps all over most of the organization, not all over, I beg your pardon. So the first issue is under declaring of this taxable compensation. Ogechi mentioned quite a lot. And then I picked benefits in kind, especially where an organization is providing you housing or paying your rent. There are certain benefits that a lot of companies don't declare, bonuses, allowances, and all of that. So the second issue is delayed and inconsistent remittances. Most companies remit partially. Some of them do that because they think the LRS will always want to get money from audit from you. No, if we come and check your books and you don't have any outstanding liability, you're going to get zero liability, and we can put that to you for a fact. So instead of just remitting half and then waiting for interest and penalty to accrue, just pay what you have to pay. So we'll be following on that. And the third is the reconciliation gaps. We often find a lot of inconsistencies around the payroll schedules, the pension records, the annual returns, the payee filing, the ITF rates, differs a lot from even your payroll costs. All these discrepancies usually trigger compliance reviews and additional assessments. Another major issue is the withholding taxes. Like I said, withholding tax will be deducted and not remitted, or withholding tax deducted and remitted late, and also without proper schedules, or not even deducted on the qualifying transactions, or even using different rates. Now, we understand that some companies really don't have this information, or they don't know. And this is where Transact and HighPay will come in to support you in that regard. So as compliance becomes more integrated and data-driven, the gaps that we would have overlooked previously now are more visible. And these are triggers. Are the reforms shaping our approach in LRS? So the ongoing tax reforms is shaping how we work. Like I said, our strength now, we're focusing on technology, data, and collaboration. For the technology, we'll be looking at digitization. Of course, we already have our e-tax system. For the guys in the informal sector, we have the eBile Hub that make you interact with us seamlessly. So digital filing, your payment systems, your reconciliation, even tax audit reconciliation, you really don't even have to come into our office in person to reconcile your accounts. You can reach us, our chat box, our emails, the website, everything is automated. Everything is working, and we also have automated notification. Your remittances, payee, withhold, all forms of your remittances. In previous years, we used to have instances where a company will have different payer IDs. All that is gone. Now we have unified it. So one company only has one payer ID. All your remittances are in just one profile. So the objective is to reduce the manual bottlenecks and make compliance easier and faster for taxpayers. But then this also means that these businesses are expected to maintain accurate digital records. Your payrolls must be complete and accurate, and stronger documentation processes. The second is data-driven compliance. The tax administration is gradually moving away from declaration-based compliance towards evidence-based. So you have to show us. Akim highlighted that. So instead of just saying, oh, I earned 10 million, now we want to see if all you earned was just 10 million or 10 million plus X. So, and now with increasing access to financial and transactional data, we're going to be working with a lot of government agencies, the NFIU, we're working with the financial institutions, we are, even with the emergence of the tax ID. Now, if a bank or a financial company, asset management company pays you interest, they will credit it because your tax ID is there. So we will see it, and then we know that, okay, there's a base that has not been declared or taxed. So assessments are becoming more intelligence-led and risk-based. So this also means that compliance is more transparent, is more measurable, and increasingly data verifiable. So we must ensure consistency across all filing records. The third is collaboration. Of course, we are adopting a preventive compliance model. We are prioritizing taxpayer education where they don't know the rates to deduct, where they don't know how to go about it. Just reach out to us, engage us, and then we would educate you. Very often we issue public notices to advise the public, okay, this is how this should be done, where there are gaps or where there are gray areas. We issue public notices and stakeholder engagement and also early intervention. Like we said, we don't just want to identify non-compliance. We want to even help the companies build a sustainable compliance framework internally. So I would say, okay, for the guidance, for businesses, my advice and how they should do their businesses going forward is they need to build internal tax governance, strengthen your compliance, in-house compliance. Now, this responsibility should not operate in silos. The finance department, the HR, procurement, the compliance team must work together to ensure that there's clear accountability structure. And where there are gaps, of course, you would, now that everyone is checking the other, the internal control is strong, you would identify it before these administrative penalties hit you. Companies should also prioritize timely remittances and filings. You use compliance calendars, automated reminders. This would significantly reduce avoidable penalties. Fourth, business should conduct regular reviews and reconciliation. Things change. For payroll now, you might engage a new employees during the year, you might disengage some. You do periodic review to ensure that all your structure is effective, your processes are effective, and internal compliance health checks. You will identify these issues before they become major liabilities. Also, the organizations should engage proactively with us. We're not here to fight you. We're here to guide you. We want to prevent escalation. We want to support faster resolution of issues. So we want businesses to build a culture of sustainable compliance. And these are the organizations that would thrive in these environments, that the organizations that treat compliance as part of their governance are the ones that would really thrive. So in conclusion, I would say tax administration is becoming more technology-driven, more intelligence-led, and more integrated. So for businesses, the message is clear. Strong governance, accurate reporting, proactive engagement, and sustainable compliance practices are no longer optional. They are very essential. Thank you.
Essential indeed. Thank you very much, Damilola. I believe we ought to give you like a lot more time to distill all of these one after the other. We've said quite a lot of things. For me, the focus is on voluntary contributions, getting people to just naturally and have a system that supports it. Then you said that LRS is not penalty driven. It's about the health and wealth of the business, because staying compliant makes you active to investors. I got that, and in fact, I had to write that down. And you said that it's important for us to strengthen in-house compliance. So, procurement cannot work in isolation, in silos. So compliance has, procurement has to collaborate with finance, and then there's the HR, and the entire value chain has to be well integrated. Now that brings me to the ERP that is required to push this effortlessly. Tunde, I'm now coming to you, right? And the question here is, what problem does iPay specifically solve in the employee and vendor payment lifecycle? Now, before you respond to that, I'd like to introduce Tunde to everyone. Tunde brings over 14 years of experience in technology and solution development. As the Chief Technology Officer at Softworks, he drives technological innovation, delivers strategic solutions that support business goals, optimizes operations and growth through infrastructure management, security, and team development. He holds a master's degree in information science management from the University of Ibadan. Tunde will be addressing the technology dimension of this conversation, showing us how automation and integrated systems help enforce compliance at scale. I mean, everybody knows a lot around ERP this, ERP that. That's all of the conversations we hear every now and again. But I want to believe that there are gray areas. And one of the things that Tunde speak to us about is what value proposition iPay has with respect to staying compliance, especially around vendor payment and employee compensation. Tunde, over to you, please.
Thank you, everyone. Thank you, all the participants. Thank you for joining, and thank you for coming. To bring all these things together practically, which I'm to speak to, and to talk about what and how iPay Suits is going to be able to help achieve all this. Because Damilola already said they are not coming with their rod, but you cannot, because of that, go and sleep. At this point, we can all agree that the rules are clear. The expectations from regulators are also very clear. The real challenge for most businesses is not understanding compliance. They do, and even if they don't have so much experience, they hire consultants to help them, at certain points or the other. It is the executing this consistently every month that actually really matters. So what exactly is the problem? From years of experience working with different sectors across Nigerian organizations, the problem is not the salary payment itself or the vendor payments. The problem sits around the processes that goes along with these payments. Employee compensation involves many components, like Ogechi and Akim and even Damilola already spoke to. Same as vendor management or payments, invoice payments and all that. Even with the new invoicing regulatory company, which is coming on everybody, even though it is still some categories of business owners that is expected to comply by now. But that is actually where the gap really is, because making procurement, finance, and the people in tax units to all work together and remain compliant, it can be very difficult, can be very tricky, and that is actually where the gap is. When these processes are managed manually, or when people work semi-silo or semi-together, four things usually happen. Calculation becomes very inconsistent. Records become fragmented across multiple people, or maybe Excel or email trails. Deadline can be missed, and you know what happens when deadline is missed. Damilola's people will be knocking at your door. And most importantly, there is no proper audit trail, which Akim already spoke excellently about this. So the real problem iPay solves is lack of control, visibility, and consistency across the payment lifecycle, be it for the employee or your vendors as well. So manual systems are not designed to handle this level of complexity, which is where the scale that we are talking about comes in. That is why businesses struggle to comply, not because they don't know what the rule says, especially when audits like the Akim and his people ask for evidence, or when Damilola's people come knocking at your door to say, okay, show us your book, let us see what your computed taxes are. This is exactly why we built iPaySuite. iPaySuite was built because of our experiences managing multiple organizations, multi-structured organizations, because a lot of tools out there, they are not built to comply. They are just built to just follow certain rules or to just do certain things. And because and that's what you get when the people you engage to build tools for you are just technology people. But here, we are professionals who looks into these things, and based on these experiences across multi industries, iPaySuite is been developed to cater to almost all business structures, except the one that we've not really seen yet, because we know that Nigerian business landscape, keep changing and keep evolving. The second question that you might want to seek answers to: how does iPay help strengthen controls? Why simplifying operations? The answer is in how the system is designed, basically. On the payroll side, iPay automates employee compensation and statutory deductions. Almost all your statutory deductions are automated. The payee, the pension, NSITF, ITF, instead of different people, interfacing with all these things and interpreting rules differently, the system just applies the same rules consistently every time, which is going to be very difficult using manual computation, because you don't know when someone is going to, forget something or not apply something properly. And that's how control is enforced, right? At the same time, it simplified the process. HR, finance team are no longer calculating manually, or sending different kind of category or different type of Excels to multiple people for different things to be added or to be removed. Everything is done in one place automatically. On the vendor side, iPay brings structure into what is usually a fragmented process. It supports compliance, the electronic and the e-invoicing out of the box, with real-time submission and the transmission, and also validate all these things and making sure that all the necessary trails are kept. Who changed what, at what point was what approved, which is what Akim people usually look out for, to say, are all these things done consistently and are there record to actually show that these things are actually done in the way they are supposed to be done. So nothing gets lost in between departments. For contractor payments, approvals, and payment milestones are built into the workflow. This ensures that every step is controlled and documented. So in simple terms, iPay strengthens controls by standardizing process and simplifies the operation by automating them, within one system, not that you have to log out of one ERP in order to be able to do some other things and all that, which, kind of like create fragmented documentations. So for iPaySuite is compliance by design. And how better payments reduce audit findings and regulatory exposure? The answer is very clear. Auditors are not just checking if your payments are made. They are checking if the processes can be traced, repeated, and defended when the questions are asked. With iPay, every transaction generates a record. Every approval is captured at the point of action. This means that there is always a clear audit trail when regulator asks questions. You are not trying to rebuild history out of the thin air or from plenty emails that were flowing around. The evidences are already there within and ready for verification and presentation where necessary. Because calculations are automated, the risk of error in your calculation of payee or complying with new rules or new laws, they are gone, because these are backed by people who support businesses. People who have been practicing for years. Those are the people who test and thoroughly make sure that these systems are robust and ready for your business. Because workflow are structured, there are fewer gaps between teams. Like we've said, your compliance team should be able to work with your HR or your finance. That directly reduce the audit findings and compliance exposures. So the other question that I think we would like to seek answers to is what compliance related benefits do I get, using IP suits? The statutory obligations are handled automatically with full audit logs. This improves accuracy, right? And the audits defensibility of all the things that is being done within the system. This will ultimately reduce errors and reduce overheads. Because when you automate, what you're practically doing is you're reducing the number of man-hour required to do certain things. And in return, you're getting back value for time spent. And at the same time, your employees can use the saved time to do something more meaningful, for especially when most of all these things are repeated tasks, and someone will just sit there and just be doing it and be doing, and you don't know when someone will be in a bad mood and just introduce an error that could cost the firm. So that's why we say compliance is no longer by effort. It has to be by design, which is what IP offers you. So if you would like to see how IP works or how it can help your organization, we'll be available after the session to talk or to give you a live demo if you require. Thank you. Blessing, over to you.
Thank you very much, Tunde. That was quite deep. IP maintains audit trail. I picked that. I know that when Akim was speaking, he kept hammering on that. The reason why an audit issue is because there is no trail. And IP is telling you they've got this under control with just a click. It says that accurate computation it provides a platform where all payment variables are all embedded into it. So there are no issues, and any variable reports that you seek, you get it. Thank you so much, Tunde. So we have a second poll that would help us to know where you believe your vendor payment risk is highest right now. Oge has mentioned all of the computations that are required to make sure that your employee compensation is accurate and compliant. Akim has highlighted the things that they look out for in the course of an audit. Lola has also talked about the focus areas that they're looking out for, and demystify the bias around it is not just a penalty-based delivery. It's actually a wealth building initiative for businesses.
Okay, yes. So thank you. I mean, the poll results clearly show that organizations are mostly concerned about the weaknesses in the vendor onboarding and tax deduction processes, right? But then it also shows that a lot of companies have approvals in place. Risk around duplicates, unauthorized payments still remains significant. But the key takeaway for me is strong documentation, segregation of duties, continuous monitoring, and technology-driven controls are critical in reducing this risk and improving overall compliance. Thank you.
So when they are making tax deductions, are there specific things they ought to look out for?
It's important. I mean, when you're onboarding your vendors, you need to know, okay, is it a limited liability company? Is it a sole proprietorship business? Is it partnership? The qualifying transactions, the rate of deduction, when these payments are due, when they should be remitted. So all these, the organizations need to be aware of that and put this in place.
Thank you very much. I hope that everybody is taking notes so that their risks are reduced. Okay, just a quick one. We have really exceeded our time. I want to say thank you to everyone that has made it thus far. But just as we wrap up, Akim, just quickly, if you are to advise a CFO or a business today, what are the top 3 things or actions that they must put in place to reduce their exposure?
Okay, blessing. I think even if I'm a CFO by myself, I'll just focus on 3 things. The first one is the workflow, the process itself, end to end. And that workflow must be embedded with sufficient audit trail and visibility. The second one is to translate that particular workflow into an automated workflow. Let it flow, let the use of technology drive the workflow itself. And this is important to save time for other strategic things. At the CFO level, you have to be thinking strategically about how to run the business to achieve its corporate objectives. So, and if you don't do it, set up a system that is automated, even at the lowest level, the problem will come back to you. And the third thing that I would say is this: the compliance space is getting more data driven. Data driven. The Minister of Finance is so passionate about data, use of data, and all data must be consistent across the different interface. This data about payroll, this data about vendor payment, they have a way of connecting together to provide an intelligent information that could pose a risk for non-compliance and probably late remittances. Thank you.
Data-driven, data compliance, documentation, and all. We have a lot to do. So we have to go back and then start carrying out our audit to ensure that we are compliant. Okay, what would be that one message you want businesses to leave with today about employee compensation and vendor payments? What is that one message?
All right, thank you, everyone. I was trying to unmute. Okay, so one of the things I'm so glad about, right, is that Damilola has come and demystified the fact that regulators are not witch hunters, because that is the because that's that's one of the feelers we get from organizations, that the tax guys are on I'm telling you that they're on a witch hunt agenda. They have a witch hunting agenda. Right. So now we have been able to demystify that fact. We just need everyone to know that regulators, right, they're more concerned with how transparent, how consistent, or how accurately the compensation is structured and reported. They are more concerned about that than even with how much is being paid. And because of this, it's important that compliance has to be embedded into everyone's payroll system, because proactive compliance is actually less expensive than reactive ones. Thank you.
We need to stop being reactive, stay proactive. What's your take on that? What's that one message you have for businesses today, especially around employee compensation and vendor payments?
I said earlier, it's compliance. Akim has emphasized it. Ogechi has done the same. Administration for us is technology driven. Intelligence left is integrated. The integration now is going to a very high level. So we will be integrating with all your customers, your clients, whatever, all the information we have. So it's important that organizations put their act together, be as transparent as possible, and compliance be on overdrive. Thank you.
Thank you very much. Tunde, is there one message that you have for audience today? Quickly, please. That you have
what
not
I would say,
mentioned.
Just automate.
Just automate. Straight to the point. Just automate, and you save yourself all of this hassle. I want to say thank you to everyone who has made it thus far in this engagement. Today's discussion that employee compensation and vendor payments are not administrative. That has been repeated over and over and over across all our panel, discussing different things, but all aligned to one thing. They are a source of financial, compliance, and reputational risk avoidance tools if we are able to manage them properly. So to stay compliant under this new tax law and avoid escalation of any kind, as an organization, you need to have accurate pay calculation and remittance aligned to the new tax bands that has been provided. You have to there has to be clear ownership of responsibilities between the HR person, the finance person, the procurement person, all aligned together. There has to be proper onboarding of your vendors on your ERP. There has to be strong control systems. Payment can't just be made because someone made a phone call and it's not reflecting in your value chain. It has to. Then there has to be integrated and auditable processes in place as supported by IP. I want to say thank you. I have lots myself, and we have what in place for audience or participants who might be interested. We are offering a payroll and vendor payment compliance diagnostics. I take that again. We are offering a payroll and vendor payment compliance diagnostics. What is it's just an audit that helps you know where you stand, in all of these things that we are discussing. Like Damilola said, we are not witch hunting. It's not penalty driven. It's a lot around helping you build a wealthy organization. So if that is your organization, do well to reach out to us to organize a structured review session to assess your control system, your compliance gaps, and identify what needs to be done for you to scale as a business. You can reach us on LinkedIn, of course, either on Doftworks or on Transact, the partner. On IG, we can be reached on Doftworks or at Transact NG. You can send us an email at info@doftworks.com or info@transact.com. Our website is also there. Our YouTube page is there. You can reach out to us. If you have any questions that you feel has not been attended to, you can send us an email and we'll respond to you a detailed response, or we can jump on a call to further discuss the peculiarities of your gaps or challenges as a business. For time constraints, we cannot take it further than this. So I want to appreciate our expert-led panel, especially Oge, Dami, Akim, and Tunde. I want to say a special thank you for taking the time out of your busy schedule to honor us and share from your wealth of knowledge on this call. Thank you so much. We just hope that whenever I call you again, you will gladly honor our call. Thank you, every participant that made it. We are so grateful. I hope you took down a thing or two. Thank you again to our managing partner, Event Jewels, for allowing us the opportunity to host this program. As we bring it to a wrap, we can drop any emoji that reflects how we feel about this session, and do have a great day.